In this video, I'll be going over 4 penny stocks that I'll be looking to buy for the month of January. But before I get into the video, if you haven't checked out my channel before, I talk about investing, I talk about the stock market, really anything that has to do with money. So if you're interested in anything like that, definitely head over onto my channel, Investing Potentials, and consider subscribing. But other than that, getting into the video, like I said, I'm going to be going over 4 penny stocks that I'll be looking to buy and that you could consider buying as well for the month of January. So as you can see right here, I have the Robinhood app pulled up and I'm recording it right now on my phone. And if you haven't checked out the Robinhood app before, or you're looking for a brokerage account, Robinhood is definitely a great way to go. 1, because it's absolutely free, and 2, because it has no minimum deposit. So you can literally start off by investing as little as $5 or really any amount that you want. And that's just really great because there's not a whole lot of brokerages that offer free trading, unlimited trading, as well as no minimum deposit. So once again, they won't charge you anything at all. It's totally free. And actually, if you click the link in the description to sign up with Robinhood, you will get a free stock while signing up. Really, you can click my link or anyone else's link. I really don't care. But if you click my link, you'll get a free stock, and I will as well. But other than that, getting into the video, the first stock we're going to be looking at today, if I scroll down a little bit, oops, a little bit too far there, is, nope, not this one actually, United Microelectronics, ticker symbol UMC. And I have talked about this stock quite a bit in the past, and one being is that it's just really one of the rare penny stocks out there that are pretty decent actually. So if we go through how they've performed over the past couple of years or so, 3 months actually in the red here, they're actually on a bit of a downturn, but that just pretty much offers up a pretty good buying point in my opinion. But as you can see on the year, up 37%, which is actually pretty decent, not bad at all. And then on the 5 years, up 51%, which isn't great growth, but actually pretty decent for a penny stock, because most penny stocks you look at, they're probably down at least 50% over the past 5 years, or down pretty significantly. But this stock is actually in the green, which is not totally surprising, but somewhat surprising for a penny stock. And if we scroll down to its stats right here, just some of its basic stats on Robinhood, it has a market cap of $6 billion, a little over $6 billion right now. And this is actually not very typical of penny stocks. Most penny stocks have relatively low market caps, some even in the only couple of 100 million, which doesn't sounds like a lot at first, but considering some big companies like Apple and Microsoft and Facebook have market caps in the 500 plus billion range, this market cap is relatively small, but actually bigger than some. So at $6 billion, pretty decent market cap. PE ratio around 18, which is actually pretty decent for any stock, honestly. Like, this is actually really good and pretty hard to find for a penny stock. Most penny stocks out there don't even have a price to earnings ratio. And I've actually posted a video in the past of what PE ratio means, but obviously stands for price to earnings ratio. And this is basically saying whether or not a company is profitable. So if they have no PE ratio, that means the company isn't profitable. But if they have a PE ratio, that means they are. And typically PE ratios under 10 means that the company may be considered slightly undervalued at its current price. And if the PE ratio is relatively high, like over 50, some even getting up to the hundreds or 200, it may be that the company is currently overvalued or that the company is expecting future growth. But if it's really anything between a positive PE ratio and between like 30 or 40, that's usually a pretty decent price to earnings ratio. And considering that theirs is at 18 right now, that's actually a pretty good ratio for any stock. So that's definitely a good number behind it. Then if we go down to dividend yield, at 3.31%, that's actually a really, really good dividend yield for any stock at all. Now, take into consideration that this is a penny stock, so obviously the dividend yield will only be, a couple cents or so, but still pretty good yield right there. Really anything above 2 or 3 is a pretty solid yield, and it's not too high where it's at like 15% or something like that. Now, the volatility on Robinhood is rated as high, but I really don't think it should be considered that. I'm not sure how Robinhood calculates that, if they use like a set algorithm or it's sort of like a preference thing or something like that, but I definitely don't think that is actually needs to be considered that high. So this is one of those penny stocks that are actually pretty decent that I think you can take a look into, especially if you have a relatively small portfolio. And just so you know, you can look up the company more obviously, but it's a semiconductor business, which is a pretty booming industry right now. I don't actually know a whole lot about the company itself, but and you've probably never heard of this company before, but it still is one of those pretty decent penny stocks. Then the next stock we'll be talking about, if we scroll back up, actually in my portfolio, is Groupon. Groupon, ticker symbol GRPN, and I should have said this when I was talking about microelectronics, but if you don't know what Groupon is, basically an online commerce marketplace where it's basically online coupons, that's what I call it. So you can get discounted prices on goods and services. They do local, they do some more non-domestic places that you can get coupons from, but if you don't have Groupon, I'd recommend downloading it. I have it on my phone. It's a good way to save money here and there, but if you look through how it's performed over the past couple of years or so, year up 58% and 5 year actually down slightly, but I don't necessarily think that that's a big deal, and I think it still is at a decent buy-in point. Even though I did buy it quite a while ago at $4, I thought that was a really, really good buy-in point, but right now I still do think it's at a pretty decent buy-in point. And if you look over here, 3 billion market cap, not terrible. Their volatility is actually considered low, so that's why I'm not sure how much I trust Robinhood's volatility rating, because I would consider this a little bit higher than low, probably more towards the medium range, but not a big deal. That doesn't really mean a whole lot. And as you can see right here, you can't really see too much from those earnings, but they don't currently have a PE ratio, but they are getting closer and closer to profitability, and I have been saying that I think they will be profitable. I do think they will be in their next earnings report. They will show some sense of profitability, which is actually on Valentine's Day. But anyways, Groupon, I think they have sort of, not necessarily a monopoly, but they definitely do hold one of the biggest companies in their specific industry or sector. There's not a whole lot of other companies out there doing the same thing they're doing as well as they're doing. There are other companies out there, but I think they're definitely one of the best at what they're doing, and they are going to continue to perform pretty well and try to get closer and closer to profitability in the next upcoming quarters. And they have been getting a little bit closer and closer, and they are inching towards that mark. So I think pretty soon they will have a positive PE ratio. Anyways, moving on to the next stock is this one right here, Sirius XM, ticker symbol SIRI, and to see how they've performed over the past couple of years or so. 1 year up 25%, which isn't bad at all. A little bit lower than the S&P 500, but 5 year 86%, which is actually pretty good for any penny stock. As you can see, if you look at penny stocks at all, you could see that they have performed well. Total return is not like what it actually is right there. Obviously, it's only at $5 right now. It's because I got a share of it from the referral program, but anyways, if you look at some of its stats, once again, really big market cap for a penny stock, almost at 30 billion. That is pretty significant. PE ratio of 33, which is actually a pretty solid price to earnings ratio, and then a dividend yield of 0.22, which obviously is very, very low, but at least it's something. I don't know if I've actually gotten a dividend yield from it. Yes, it's literally only 1 cent, which obviously is very low, but at least it's something right now. And this is actually, kind of a more rare penny stock to find because it is profitable, similar to UMC, which is pretty cool. And Sirius XM, once again, one of those stocks that I think kind of has a monopoly or is doing very well in its industry. There's definitely a lot of competitors out there, but Sirius XM is definitely one of the better companies that hold in automobile radio. I guess if you haven't heard of the company before, I think it's a little bit more of a well-known company, basically a radio company, but they are moving much, much more into focusing into online stuff. So you can get the app, you can get it in your car. It is a paid subscription-based service, so similar to a company that I talk about like Netflix. Some of their things that will be heavily, heavily impacted on how well the company is going to do is how many subscribers they get and how many subscribers they continue to grow and how good that subscriber growth is from quarter to quarter or from year to year. So I think that will definitely be a very big number with them. One thing to note, similar, this kind of a company that I can compare to Netflix very easily. They have a lot of their own radio stations as well as they outsource radio stations, which I think is a better thing to do to become more profitable, is to try to create some more of their own radio stations. I think voice is going to be big in the next few years or so, and I'm hoping that SiriusXM makes the right executive decisions to jump on that train. But anyways, that's it for SiriusXM. The next stock I'll be talking about, and the last one, If we scroll down right here, is Glue Mobile, ticker symbol GLUU. And once again, talked about this stock in the past. I think the video game industry is heavily underrated and heavily not invested in as much as it should be, because it really is quite a booming industry. I'm not sure if people feel like, I don't know, if they feel dumb or something like that talking about video game stocks, or if they don't feel confident. But as you can see, in the past year, up 64%, which is very good. 5-year only 52%, but it is still profitable. And if you scroll down here, smaller company, only 500 million market cap, but that kind of makes sense for what they do. No PE ratio or dividend yield, because they currently aren't profitable, but I believe they will hopefully be. Definitely not in this upcoming earnings report, but perhaps in the later of 2018. And they actually have an earnings report coming up soon on the 8th, so we'll have to see how that comes. But like I was saying, it's a video game company. They mainly do mobile games, and I think mobile games, well, they are, not this, I think that they are becoming more and more popular as more and more people are using their phones more, and really been playing a lot of games on their phones. And Glue Mobile, relatively new company, young company, so definitely a bit riskier than some of the other ones, but still a solid penny stock, especially if you have a relatively small portfolio. So anyways, those are the 4 penny stocks for the month of February. I'm not sure if I said February in the beginning. I might have said January, but month of February. So Glue Mobile, UMC, SiriusXM, and then the last one is Groupon. But anyways, if you enjoyed the video, definitely leave a like and comment below on what you think of these penny stocks, and if there are any other decent penny stocks out there. But other than that, guys, I hope you enjoyed the video. And actually, one more remark before I close out here. Just a note, penny stocks are inherently risky, and probably riskier than other stocks out there. I do not as an investor, and there aren't a whole lot of successful investors out there that invest a majority of their portfolio in penny stocks. I think penny stocks can be okay for certain reasons and certain situations. Like, for example, if you have a very small portfolio, you can't go out there and buy some stocks like Apple or Microsoft or Facebook, because they are so expensive. By expensive, I mean they're sometimes, in cases, hundreds of dollars. So I still think there are some decent penny stocks out there for smaller investors to invest in, and that is what I tried to find for these videos. But anyways, that is it for the video, guys. I hope you enjoyed.